Hello friends, I am Narendra Verma once again before you. As you know very well, in accountancy for class 12 CBSE syllabus, as per revised one, we are dealing with the fourth chapter, that is change in profit sharing ratio among existing partners, right? And till now we have learnt about treatment of goodwill, right? Now in today's section, what we are going to learn? We are going to learn accounting treatment of reserves and accumulated profits or losses, and this is related to this as well. Treatment related to Workmen Compensation Reserve in all cases. Similarly, treatment related to Investment Fluctuation Reserve in all cases, right? So without wasting much time, let's start it. So what happens when there is a change in profit sharing ratio? Then on that date, whatever reserves, whether these are general or specific reserves, we'll talk about a specific reserve later on, but right now we considered reserve. Okay, so on the date of change in profit sharing ratio, as many reserves and accumulated profits or losses are there in the balance sheet, okay, these need to be shared between or among the partners in the old profit sharing ratio. Why? Because all the partners have earned these profits, okay, in their old profit sharing ratio. So they have right on these balances in the similar ratio, so that there should be the fair treatment with all the partners. All right. So now let's talk about reserve. See, we will break the reserve in two parts. One, general reserve, and another is specific reserve. About specific reserve, we will talk about later on. Right now we are talking about general reserve. Okay, general reserve is what? The part of profit. Okay, so in balance sheet or in question, the information is given related to credit balance of profit or reserve. Then what treatment we are going to do? Nothing more we have to do. We need to just pass one journal entry of the distribution of profit and reserve. How? I'll show you. See, this journal entry will be passed. Okay, profit and loss account means credit balance will be debited, and reserves, general reserve account will be debited to all partners' capital or current account. If they are following the fixed capital method, then current account. Otherwise, in case of fluctuating capital method, capital account. Understood? Being reserves and accumulated profit distributed among partners in old profit sharing ratio. Let me tell you one more thing. It is not necessary that in all the questions you will be getting both the things available. Maybe possible one question is having only profit and loss, credit balance of profit, and another question is having only the reserves, and there is also a possibility that one question is having both of them. So that's why I have done here the combined entry. Okay, I hope you must have understood. That's nothing so special about this entry. That's very easy entry. This is what the entry for the distribution of profit, nothing else. Right, now let's talk about the opposite entry of that in case of loss. Okay, if there is a loss given in the balance sheet or mentioned in the question, then what's going to happen? Just opposite treatment will be done. How? I'll show you. So you can see in case of loss, just opposite entry we have passed. Earlier we credited partners capital account, now we are debiting partners capital account. Okay, now profit and loss account will be credited. Okay, means debit balance, loss, and one more account you see here, deferred revenue expenditure account, or you can call them fictitious assets like advertisement suspense account. Okay, you already know that. Fine, because actually these are also the part of losses. Okay, so being all accumulated losses distributed among partners in old profit sharing ratio. Understood? So in case of profit or reserve, and in case of loss or deferred revenue expenditure, what entries are going to be passed? I have told you. Now let's do some numerical questions on these so that you can have the better understanding about these. Okay, so you can see the question on your screen. So I have written the questions here, both the problems. Problem 7, as this is the series going on, already we have covered up 6 problems. So this is the 7th one. Vinay and Ajay are partners in a firm sharing profits in the ratio of 3:2. Alright. They decided to share future profits equally. Okay. On the date of change in profit sharing ratio, profit and loss account showed a debit balance of rupees 1 lakh. Pass an entry for distribution of balance in profit and loss immediately before change in the profit sharing ratio, right? See, they are having this old ratio, okay, and this is the debit balance of profit and loss. Debit balance of profit and loss means loss, okay. So the second entry that I have just taught you, that will be done. So what will be the entry? What are the names of partner here? Vinay. Here, in the absence of any information, we will consider that they maintain fluctuating capital method. Okay. Now, what is the amount of loss? 1 lakh. This 1 lakh has to be shared between these two in the ratio of 3:2. So, how much Vinay is going to share? We can calculate here, right? Vinay's capital account debit. Ajay's capital account debit, okay, 60,000, 40,000 to profit and loss account 1 lakh rupees. Being accumulated losses shared between the partners in old ratio. How? This is the working note. Okay. So in that way it will be done. Let me tell you one more thing, that right now we are just learning the pieces of the question. When we have the full-fledged question, so this entry will be the one part of that question. Alright. So but we need to learn that. Okay. Understanding? Now let's move on to problem 8. You can go back to the video because in the same slide you will find both the problems together. Okay, so let's see the question here. Anne and Binny are partners in a firm sharing profit in the ratio of 3:2. Once again, they decided to share future profits equally. Fine. On the date of change in profit sharing ratio, the balance sheet showed undistributed profits of rupees 50,000 and reserves of rupees 1,50,000. Pass journal entry for the distribution of profits and reserves immediately before change in profit sharing ratio, right? See, here two things are given. Undistributable profit means credit balance of profit, and another reserve. So the first entry I told you, that will be passed, right? How much amount of profit is given? 50,000. Reserve is 1,50,000 to, what is the name of partners? See. Now, we can pass two separate entries as well, one for the profit and another for reserve, but we can do the combined entry, that is the better idea. Fine. Okay, so now let's calculate. The total amount is 2 lakh. Alright, so this 2 lakh has to be divided between these two partners in this ratio. So let's calculate for Anne, it's 1,20,000, and for Vinny, it's 80,000. Alright, and this is the working note for that. Okay, so profit and loss account debit 50,000, reserves account debit 1,50,000, to Anne's capital 1,20,000, to Binny's capital 80,000. Here also we consider that they are maintaining fluctuating. In the absence of any information, we have to consider that already we have learned in the chapter 2. Alright, so this is all for this. Now let's move on to the specific reserves. Fine. So, accounting treatment of specific reserves in various cases. Generally, in the problems related to partnership in your syllabus, okay, there are found two kinds of specific reserves. One, Workmen Compensation Reserve, another Investment Fluctuation Reserve. In short, we have abbreviated that WCR and this IFR. Okay, so this Workmen Compensation Reserve, we need to very first understand the meaning of this, why it is made. Only then we can understand the treatment, right? As by the name it is very much clear, workmen related to employees working in the organization, and compensation means if there is any kind of accident taking place, then in return the company is supposed to pay the amount to the employees. For the same purpose, this Workmen Compensation Reserve is made. Okay, reserve is what? Reserve is the amount set aside from the profits for some specific purpose. And what is the purpose here? The purpose is there when the employees or workers are working in the organization, in firm, in concern, then maybe possible they are dealing with the operation of plant and machinery. Okay, any kind of accident may take place at any time, right? Okay, so for example, there is one newspaper publication house. This is being run under partnership, okay, and the employees and workers are working there, okay. There is one worker who was trying to print the newspaper with the help of machinery, but all of a sudden, don't know what happened, okay, his hand got injured. Now immediately he was hospitalized and his hand was operated, okay. Lot of amount was needed, fine, and he belonged to a very poor family. Now how that amount will come? The family members of that employee will definitely go to the owners, help us out. Now all of a sudden, how the owners are going to manage the money, because their business is going to suffer in that case. Alright, so that is why they have already made provision for that. They just foresee this liability because that may take place in their businesses, okay. So they just keep some amount aside from their profits when there are large profits, okay, for such kind of accidents, okay. If any accident arises, claim arises, then the payment is done out of this reserve. And if there is no claim, no kind of accident took place, then what happens? The entire amount is distributed among or between the partners. Understood the point? Okay. Now we are learning this Workmen Compensation Reserve in concern to change in profit sharing ratio among existing partners. Now say for example 3 partners are there, from some date they are willing to change their profit sharing ratio, okay, but they have this reserve in their balance sheet. This is also the part of profit. Like already we have understood, they earn the profits and reserve in the old profit sharing ratio, okay. So they need to share it in the similar one before they change their profit sharing ratio. So before making any change in their ratio, they need to settle it out. If there is any claim, then first claim will be paid. If there is no claim, the entire amount will be distributed between or among the partners. So it was all about Workmen Compensation Reserve. Understood? And what can be the cases? I just give you the brief idea. Okay, the case can be there. I just give you one example, by that you will understand in better way. So suppose there is the WCR in one partnership where they are willing to change their ratio. Okay, that is 1 lakh rupees. Fine. And if they see on the date when they want to change the ratio, there is no claim, right? Then this entire amount will go into the pocket of the partners in their old profit sharing ratio. One case when there is no claim. Understood? Now, another case, claim is there, and in this claim there will be 3 possibilities. One possibility, claim is equal to WCR, right? And there is very rare possibility that 1 lakh is made and the accident amount is also 1 lakh. Okay, but there is a possibility. Okay, one possibility. But there are high chances of 2 other possibilities. Okay, that claim amount is lower than WCR. WCR is therefore 1 lakh. Say for example, at the end of the year when they are going to change the ratio, only 50,000 claim was there. So rest of the 50,000 will be going to the pocket of the partner and 50,000 claim will be settled. Understood? And last case can be there, higher than WCR. There is also a possibility. Okay, that I gave the example of hand accident. If a person dies, that is also possible. In that case, lot of amount has to be paid. Okay. So, say for example, there is the claim amount 1,20,000. Now, what will happen? This 1 lakh will be utilized very first because this has been made for the similar purpose, and 20,000 above will be borne by the partners in old profit sharing ratio. Understood? So we'll be learning about these within a moment. After explaining this investment fluctuation reserve, I'll explain you the journal entries also related to that, and then we'll do one numerical question. Alright, now let's talk about this investment fluctuation reserve. What is that? See, as by the name it is clear, investment fluctuation. Investment unit, whenever the firm has excess money, then they invest it in the market in certain securities, or they buy shares, debentures, okay, or they invest in gold or in property, anything. They can make investment anything, right? So why the firm makes investment? Firm makes investment so that it can earn return on that. Okay, but all the time it does not happen that because you invest money in the market, sometimes you gain and sometimes you lose. Let's take the example of shares. One firm, partnership firm, invests, say for example, 80,000 rupees in shares. So their investment is of 80,000 rupees. We're taking one example, right? Now, they are willing to change their profit sharing ratio today. And today what has happened? They invested that money a few years back. Now, at present, the market value, see, there are two kinds of value. One is book value and another is the market value. I just explain you the meaning of both. See, book value means visible in books. Books means balance sheet. The value which is visible in the balance sheet, that is the book value. And market value means current value in the market. Okay. So the books show that they made an investment of 80,000. Now today, when they are going to change their profit sharing ratio, they need to settle all the reserves. Fine. Now they see the market value of this investment. Right now we're not talking about this reserve. We'll talk about this reserve later on, but right now we're talking about the investment. Okay. If they want to sell this investment today, then what the price will be offered to them, that depends on the market. Say for example, in market right now the price is 70,000. Right? Now they experience loss over here. So just to bear this loss, because this is the very small example, firms make investment with the huge amount, right? Okay, so just to bear the loss of the fall in the market value of the investment, they maintain one reserve which is known as Investment Fluctuation Reserve, right? Means some amount of profit has been set aside for the purpose of the fall in the value of investment. So what is the purpose? Just to meet the fall in the market value of the investment, right? Okay, suppose the same thing, just for this they have already maintained IFR of rupees 50,000. So now from this 50,000 they can set off 10,000 very easily, right? Okay, and after that how much amount will be left here? 40,000. Alright, and if they are going to change their profit sharing ratio, so this 40,000 needs to be distributed between or among the partners, right? So right now we are not talking about selling the investment, but we are talking about the reserve. So when we are going to change the profit sharing ratio, we need to settle this reserve. But before settling that, we have to see that what is the market value of this investment right now, right? If there is a fall in the market value, then very first the fall has to be settled out of this. Only then the remaining amount will be distributed among or between the partners. Understood the point? How and how many possibilities can be there? Let's have a look. So let's continue the same example. They have IFR of 50,000 and investment book value is 80,000. Fine. Now, whenever they want to change the profit sharing ratio, at that point of time, they have to see the market value of the investment, right? So one case is what? There is no change in the value of investment, right? So we can say no fall, no increase, okay? So in that case, this reserve is free. Okay, then entire amount of this reserve will be distributed between or among the partners. One point, another. If fall is there, then there are again three possibilities. Fall is equal to IFR, right? So how much maximum fall the firm can bear? 50,000, because they have maintained the reserve of 50,000. Okay, so this is also the rare possibility, but possibility is there. But there are high chances of higher. Okay, if the fall is more than IFR, right, then there is a problem. Okay, because what's going to happen? Say for example, they have IFR of 50,000 and the fall is there of 70,000. 50,000 will be set off from here. What about remaining 20,000? So 20,000 will be borne by the partners. Understood? Now another possibility. fall is less than IFR, then there is no problem. Okay, the previous example we considered that the fall was there of 10,000. So 10,000 will be deducted out of this and rest of the 40,000 will be distributed between or among the partners. Understood? So there is one more case here. Suppose there is increase in the value because for the same the investments are made, right? So if there is the increasement, partners are going to get the gain. So the gain will be distributed between or among the partners and the entire value of this reserve will also be distributed because the purpose was not utilized, right? So how the things are going to happen? Very first I'll teach you the journal entries related to that, then we'll do the numerical problem as well. But right now we are going to focus on WCR. Later on we'll come to this. Fine? So let's start treatment related to Workmen Compensation Reserve, all cases, right? Okay. So as I told you, there are two categories, okay, and in one category, one journal entry will be passed, and in the another category, there will be three cases. How? I tell you. See, there are two categories. One, when claim against WCR does not exist, means firm has maintained Workmen Compensation Reserve, but fortunately no accident took place and no claim arose, right? When the partners are willing to change profit sharing ratio, at that point of time there is no claim. Understood? So one category. Another category, when claim against WCR exists, right? When the partners have decided to change their profit sharing ratio, then there arises some claim related to Workmen Compensation Reserve. And in this category, there are three cases. Okay, one case, all the claims are equal to the WCR amount. Second case, the claims are lower than the WCR amount. And the last case, the claims are higher than the WCR amount. Understood? I just write it down here. So there are three possibilities here and two broad category of cases is there. Let's talk about this one case when there is no claim, right? Then in that case, entire amount of WCR is distributed between or among the partners. And what will be the journal entry? The same journal entry. It is as similar as the general reserve, right? Only the name will change, right? Workmen Compensation Reserve account debit to all partners capital or current account. If in case of fixed capital method current or in fluctuating capital. Understood? Being WCR distributed among partners in old ratio. This is very simple one because there is no claim. The entire amount will be distributed among or between the partners. Understood? Now let's talk about this. When claim exists, then there are three possibilities. So in these all three possibilities, separate journal entries will be passed. So very first, let's talk about when claims are equal to amount of WCR. Now what's going to happen? See, when all the claims are equal to the amount of WCR. Say for example, 50,000 is the WCR and 50,000 is the claim. Okay, so partners are going to get nothing in that case, right? But one journal entry will be passed to settle the claim. Okay, so this will be the journal entry in case when claims are equal to amount of WCR. Workmen Compensation Reserve account debit to provision for Workmen Compensation Reserve account or to Workmen Compensation Claim account. Let me tell you one thing. It depends on question. If in question it is given that the claim is estimated, when the estimates are made, then the provision is made. Okay. Or if in the question it is given the claims are determined or accepted, it means finally these have been settled. So there is a bit difference. Okay. So when in question it is given accepted or determined, then you need to mention Workmen Compensation Claim account. Otherwise, in normal cases, you will be mentioning to provision for Workmen Compensation Reserve account. Understood? Being claim against WCR provided or settled. Okay. So this is there only for information. If accepted or determined is given, only then we'll pass the entry by this. Otherwise, in normal cases, to provision for Workmen Compensation Reserve account. Now let's talk about the second case. Okay, when claims are less than the amount of WCR. If the WCR amount is 50,000 and the claims are 30,000, 40,000, 49,000, but lesser than the WCR, then in that case what happens? The whole amount of claim is settled out of WCR and the remaining balance of WCR is distributed between or among the partners. So there will be two entries passed here. How? I will show you. So, like I told you that in case 2, when the claims are less than the amount of WCR, there will be two entries passed. So, one entry will be similar because the claim has been settled. I give you the example. The WCR is 50,000, the claim is of 40,000, say for example. So, for 40,000, we will pass the entry, Workmen Compensation Reserve account debit. Okay, to provision for WCR account debit, right? And for rest of the 10,000, that will be distributed to partners, right? So the entry will be Workmen Compensation Reserve account debit to all partners, capital or current account, being surplus or WCR distributed between the partners. Now let me tell you one thing, you can combine these two entries as well, right? Because in both the cases, you can see that WCR is debited. So we can debit the entire amount of WCR once and then we can credit these two things together. How? I will show you. Okay. So the combined entry can be passed here. WCR means Workmen Compensation Reserve account debit to provision for WCR account. If there is determination or acceptance, then claim will be there. Otherwise, it will go on to all partners, capital or current account. 50,000, 40,000, 10,000. That will be distributed between the partners. Understood? So this is about the second case. Now let's talk about the third case. So now you can have a look here. In that case, we have to pass two entries. We cannot even combine them as well. What is the case? The claims are more than the amount available. We have the amount of 50,000. The claims are of 60,000, right? So we'll put the entire 50,000 here and remaining 10,000 will be put here because we have to settle the claim for 60,000. So from where the 10,000 will be managed, so that will be a kind of loss. Okay, a temporary account will be opened for such kind of losses or profits, that is revaluation account, right? Later on we will understand about this account in detail. Okay, or this is the same WC claim account in case the claim is accepted. Okay, otherwise normally we pass the entry provision for WCR account. Fine. Second entry, this loss will be shared by the partners. Okay, because now there is nothing in the reserve that has gone excess, means there is a condition of loss, so the loss has to be shared by the partners. All partners, capital or current account will be debited to revaluation account, right? So this account has been closed here. Here it was debited and now it is credited, being loss on revaluation borne by partners in old ratio. Understood? So this is all about all cases of WCR. Now we are going to attempt one problem in which we are going to deal with the all cases related to WCR. You can see the question on your screen. So I have written the question here. Let's read the question. Akash, Vikas and Rakesh sharing profits and losses in the ratio of 4:3:2. This is the old ratio. Decided to share the future profits and losses in the ratio of 2:3:4, but that is useless for us right now with effect from 1st April 2019, right? So the all entries will be passed here on 31st March, right? Because before change in profit sharing ratio. Understood? An extract of balance sheet as at 31st March 2019 is Workmen Compensation Reserve is given 1,80,000. Fine. Show the accounting treatment under the following cases. So all the cases are given here. Case 1. So we'll put here case 1. If no information as to claim is given or there is no claim, so this situation can be presented in two ways. In some question, there is no information is given related to WCR, but WCR amount is given. One. Another, that in question specifically it has been mentioned that there is no claim against WCR. So whether it is mentioned or not, okay, then in that case we are going to do the same treatment. We consider that there is no claim. So when there is no claim, the entire amount will be distributed among or between the partners. So what will be the entry passed here? Let's see what are the names of partner. Okay, so let's put the value here. The entire amount 1,80,000. So this has to be divided in old profit sharing ratio. So what is the old profit sharing ratio? 4:3:2. 4, 3, 7 to 9 means this Akash is going to get how much share of 1,80,000? 4 by 9. Let's calculate that. 80,000, and for Vikas that will be 3 by 9, 60,000, and for Rakesh that will be 2 by 9, right? 40,000. So 80,000, 60,000 and 40,000, right? Okay. So this will be the journal entry. Workmen Compensation Reserve account debit to Akash capital account, to Vikas capital account, to Rakesh capital account, 80,000, 60,000, 40,000, being amount of WCR distributed among partners in old ratio, right? This happens when there is no information related to WCR is given, no claim is given, but the amount is given. Understood? Then we have to distribute it because partners have right on that. Now let's discuss the case 2. So the case 2 says, if a claim on account of workmen compensation is estimated at rupees 90,000 and this 90,000 is less than the 1,80,000, so this is the second possibility of second category. Understood? Okay, so the entire amount will be putting here Workmen Compensation Reserve account debit 1,80,000, right? Out of this one claim, so as estimated is given, so we'll put here only provision for Workmen Compensation Reserve account, right? And how much amount is given? 90,000. Now out of 1,80,000 we have deducted 90,000. How much amount is left? 90,000. So this 90,000 will be divided among the partners. Understood? So here, as I taught you the combined entry, so combined entry can be passed here. Let's calculate the amount first. So we see for Akash it is 40,000, for Vikas it is 30,000, and for Rakesh it is 20,000. So let's mention the value here: 40,000, 30,000 and 20,000. Okay, so you can have a look. Workmen Compensation Reserve account debit 1,80,000 to provision for Workmen Compensation Reserve account 90,000, to Akash capital we have calculated 40,000, to Vikas capital 30,000, to Rakesh capital 20,000, being claim against WCR provided, and rest balance or surplus balance distributed among partners in old ratio. Understood? Now let's move on to case 3. So case 3, what it says, the same. If a claim on account of workmen compensation is estimated at rupees 1,90,000, you can see here that is higher than the amount available for WCR. Amount is 1,80,000, so 80,000 is the higher, right? Okay, so very first we will settle the claim out of this. So the claim is there for 1,98,000, right? So claim is of their 1,90,000, right? So we have put to provision for WCR account 1,98,000. Okay, but if we see that it is going excess by 18,000, so how these 18,000 will be arranged? It will be a kind of loss for the firm. So for the temporary, it will be put under revaluation account, alright, and the entry will be completed here. Okay, Workmen Compensation Reserve account debit 1,80,000 because we have the entire reserve with this value only. Revaluation account debit 18,000 the excess, and the provision for WCR account. Alright, now we'll pass the second entry. Okay, because this loss has to be borne by the partners. So the loss in the revaluation account is of 18,000, so we'll put it here. So now this 18,000 will be shared by all in the old ratio, right? Let's calculate the value. Okay, I'll just calculate it here. For Akash, his ratio is 4 by 9, 8,000 he will bear. Okay, now for Vikas, 6,000 he will bear. Now for Rakesh, 4,000 he will get. Comes out 18,000. Right? Understood? Two entries in the last case. Okay. Now let's move on to another case. The case number 4. What it says? It says estimated at rupees 1,80,000. 1,80,000 is the equal. Okay. The first case in the second category I discussed. Very rare possibility when the amount of claim is equal to the amount of WCR. Okay. So single entry will be passed here. I will show you how. So you can have a look. Workmen Compensation Reserve account debit 1,80,000 to provision for Workmen Compensation Reserve account 1,80,000 being claimed against WCR provided, right? Because now partners are not going to get anything because entire amount has been utilized for the purpose it was made, right? Now the last case, see the language here, the same. If a claim on account of Workmen compensation is determined at rupees 17,000. Okay, this case is similar to the case 2. This is also less than the WCR and this is also less than WCR, but here the language is different. The word is determined is given, and I told you when the word determined is given, now how the things are going to change. In place of provision for WCR, we will put only Workmen Compensation Claim Account. So you can see here Workmen Compensation Reserve account debit 1,80,000 to Workmen Compensation Claim Account. Why? Because the word determined is given here 72,000 to Akash Capital, Lukas Capital, to Rakesh Capital, and narration you can see being claimed against WCR determined. Fine. Now we will have to divide the remaining amount among the partners. So out of this 1,80,000, if we remove 72,000, how much is left? 1,08,000. So this 1,08,000 will be divided among the 3 partners. So for Akash it is 4 by 9. So here you can see for Akash it is 48,000, for Vikas it is 36,000, and for Rakesh it is 24,000. Okay. So in that way the entry will be passed. Alright. So friends, it was all about the treatment related to the Workmen Compensation Reserve in the all cases. Okay. In your numerical problems further, the full-fledged one, you will be finding such cases. May be possible one case is given in the question. I am not saying that all the cases will be given in all the questions, but here we have discussed all the cases together. Okay, now let's move on to another part of this accounting treatment of reserves. Right now, guys, we are discussing the specific reserve. So another specific reserve, the Investment Fluctuation Reserve. Alright, so let's have discussion about that.